Hi everyone, let's go through my preferred scenarios only from the macro to the low time frames, where I will explain to you my reasonings as well. Starting on the macro time frame, my preferred scenario at the moment is actually the bullish one, where this is a 1, 2, 3, 4 and now looking for a fifth wave to the upside. The reason that this now is my preferred scenario on the macro time frame has to do with this wave 4, because if we go to the bearish scenario shortly, you will see that this wave 4 over here is very short in a 1, 2, 3, 4, 5, and usually a wave 4 is longer than a wave 2. So I don't really like this, and just by the looks of it, this works a lot better, where this is the yellow 1, 2, 3, 4, 5, and then this is a 1, 2, 3, and then a longer 4 over here, which is longer than this wave 2, bouncing on exactly the 0.5 fib taken from the low of 2 to the high of 3. The low is made, the exact weak low is made on the 0.618 fib time taken from the low of 2 to the high of 3 as well. And we also had a very high nice volume spike over here for some extra confidence to the upside. So of course we will go through the lower time frames, but on the macro time frame at the moment, just based on this wave 4, this is looking the best from an Elliott Wave perspective. And then we have targets between basically 98k and 174k. Now the potential trading setup here for a very big swing trade is having a little bit of a move to the downside and then entering potential long position, stop loss below the low of 4, as that is a very clear invalidation, and then trading it to the upside for very high targets. If we then go to the high time frame, which for me then is the daily time frame, then of course the preferred scenario here is then in line with the macro time frame, where this then is a 3 wave in W, an X, a Y, an X, and then eventually a wave Z. Now the X over here didn't hit the 0.382, which usually is a rare target for the X, and wave Z only hit the rare target for wave Z, but that's fine because we know from the macro time frame that over here we also have the 0.5 Fibonacci. So we don't want to see high time frame candles close below the 0.5 Fibonacci on the macro, so it's more than normal that over here wave Z then stopped at the 0.618, which is a rare target for wave Z. And if we then look to the move to the upside, my preferred scenario on the high time frame is that this is a 1, 2, 3, 4, 5, so that we are now ending wave 1, which then is followed by a wave 2 before then a potential 3 to the upside. The volume so far of this move to the upside is looking good. Wave 3 over here with the highest amount of volume, and if this is a wave 5, we also see a lower amount of volume, which is exactly what you want to see. Currently, we are also at an important area, as this is also a very big support resistance area, so it could be nice as well for a potential short setup to enter positions around where we are now, a little bit laddering to the upside, having a stop loss somewhere above safely, and then trading it to the downside. And when you think about the sentiment in the market as well, this is such a big area, and when we bounce to the downside over here, people will very likely become very bearish again, which would be very nice for then entering potential longs over here, where people are selling, expecting downside. But in this scenario, we're building a potential long position with this potential trading setup, stop loss below Z, and then eventually trading it to the upside. Now, the most common targets for a wave 2 are the 0.5 to the 0.786, basically between 21.1 and 17.7k. However, the golden pocket is by far the most common area for wave 2, which has nice confluence with this low here as well. So you could have a little bit of a liquidity grab before then a move to the upside. If we then go to the more medium time frame, I'll go to the 4-hour for this one. I want to explain that actually the bearish and the bullish scenario both have the exact same trade. So yes, the preferred scenario, I guess, is the bullish one, where this is then a wave 1, 2, looking for 3. But I like to say on the medium time frame that wave X in a bearish scenario, where this then is over here a wave W, X, and Y for a lot more downside, that the trade is exactly the same. And that is actually very beneficial, because based on the move that we get to the downside, one can then think, okay, is the bullish scenario more likely or the bearish scenario more likely? And maybe we're not even coming down. Maybe it's a very bullish scenario where we only go up, of course, but that is not preferred at the moment, as mentioned in this video. So over here, we are now ranging inside the wave 5, the green wave 5 target area, the 1.236 and the 1.618, taken from the high of 3 to the low of wave 4. We didn't reach the max target, but we did reach the minimum target. The max is 29.6k, which also is a very attractive target because of the support resistance area over here, and also a minimum target of wave X from the all-time high to the low of W over here is actually the 0.382, which also sits at exactly the same level, 29.6k. So this area where we are now is very important. However, wave 5 of this final impulse might already be in then a 1, 2, 3, 4 and 5 ending here, which I will show you on the lower time frames. Potential trading setup is entering in this area, stop loss safely above, trading it to the downside. And if we then go to the lower time frame, my actual preferred scenario is not a bullish one. It's more like a little bit of a bearish one, I suppose. The preferred scenario at the moment, which looks the best just by the looks of it as well, is currently a triangle. So over here we then have a 3-wave in A and then or W. It's an A or W. Then we have a B or X. So we have an A or W, B, X, and then looking for a move to the downside, which either is going to be an impulse or a wave Y. Now in this scenario we have then in the B or the X we have a triangle, which is a 3-wave in a complex in B, more likely to be a W, X, Y, X, Z in this wave B, followed by a 3-wave in C, looking for a D and eventually an E. Now the triangle, in my opinion, is definitely not in. The most common targets for each wave of a triangle is the golden pocket, which is what you see right here. Taken from the low of B to the high of C, you get this main target for wave D, and then eventually the same you can do for wave E, taking the Fibonacci from the high of C to then the low of D whenever it's in, and then this is the most likely target for E. Now, if we do make wave D over here and we go up for E, this wave over here for wave E is not allowed to go above wave C, as then it's invalidated. But at the moment, as it stands now, I have the invalidation all the way up here. This is very likely to be the high of C, but of course we can't yet be guaranteed. It does look like a very nice C wave though. However, if this is an A, B, like more like an A 3-wave in B and then a C wave, it did get close to the rare target of a C wave, which actually is the 1.618. So I'll show you over here. So we do that, and then then I have 3 dots on my chart, which of course is not what we want. So we take the trend-based fib extension tool, and there we go. And then I'll put it on wave C zigzag, and you can see that the most common target for zigzag is actually the 1-to-1 and the 1.236, but now we almost hit the 1.618, which is relatively rare. So we'll see how this works out with what is yet to come. Also on the lower time frames, we do have a little bit of bullish divergences between this low over here and this low over here. It's a little bit of a higher low and lower lows on the CVD. But this move did go quite deep to the downside over here. So we'll see. If we move to the upside, it might be possible this triangle becomes invalidated and that we have more, let's say, bullish scenarios that are going to be in play. I, of course, showed in my previous video all of my scenarios, including also the moves that I'm looking for the upside, like this one over here, for example, where we have an A, B upside and then C to the downside. So yeah, another one over here is where we have an A looking for eventually a move to the upside in either W, X, Y or an A, B, C. So we'll see how this pans out. But so far the triangle looks quite nice. We do have, as mentioned, bullish divergences. So yeah, if we go to the upside and we move to the upside too far, it's kind of invalidated for me. I don't mind making another high, but then wave C might be a bit stretched. So we'll see. And also, what's also a possibility, by the way, is wave D tends to be a more complex type of structure in a triangle. So what's also possible is that we have a 3-3-5, so an expanded flat over here, where this is then some sort of a 3-wave you have to make of it. Then we have a move up in 3 waves and then an impulsive move to the downside. So then you have a complex flat basically in wave D before then you have E and then down eventually. That being said, I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at my next video at 7 p.m. Central East European Time. Bye bye.